Welcome to this month's Big Picture episode of the Michael Yardney Podcast, where Pete Wargent and I dissect the multitude of macroeconomic factors currently shaping our housing markets and the broader economy. Whether you're an investor, a homeowner, or just a curious mind, our monthly deep dive promises to keep you informed and ahead of the curve. So, without further ado, let's dive right into the conversation with Pete Wargent.
Welcome to the Michael Yardney Podcast, where twice each week you will learn a number of new ideas regarding success, property investment, and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect, and pass on your wealth through strategic property and wealth advice. Now, here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
In these regular Big Picture podcasts with Pete Wargent, I discuss the macroeconomic factors affecting our economies, our property markets, and boy, there's lots to discuss today, including the latest population growth figures, the true state of what's happening with distressed listings. Have we fallen off that mortgage cliff or not? The proposed Airbnb tax and lots of other things. Now, I'm delighted to have Pete back again. Once a month we get together, and he's one of Australia's most respected financial analysts and commentators. And Pete brings a different level of perspective, an international investor and financial analyst. So thanks for joining me once again, Pete.
Pleasure. Thanks, Michael. Always great to be on.
Well, there's been lots of news since we last spoke, and it seems to be frequently in the news how our population has been increasing much more than initially thought in any of the projections. This has underpinned our property markets, created a shortage of dwellings, vacancy rates at historic lows, and I guess it's going to have lots of other side effects as well, Pete.
Yes, I mean, the figures are always a little bit backward looking, but latest figures over the year to March anyway, over 563,000 extra people in the country. That's a growth rate of 2.2%. So I guess we haven't really seen anything like that. The growth rate just in the lead up to the financial crisis during the mining boom years was about 2.2%. But in absolute terms, the actual number of people in the country is increasing at a rate we've never seen before. And in some parts of the country, absolutely booming along. So that's largely driven by things like the return of international students, temporary visa holders are at a record high. So it will, I think, naturally eventually level out to something a bit more sustainable. But at the moment, we're absolutely rollicking along.
Well, it's a combination of factors too, because when we talk about the population growth, it's the net growth. And normally there's students coming and students leaving. There weren't many students leaving this time around because we didn't have many come in a couple of years ago. So these students have taken up a lot of the apartments that were vacant over the COVID period. I think one of the other factors is we're living longer. There's more 1 and 2 people households. There's fewer people per average households. And that actually requires, just even for the same population, more accommodation, Pete.
Definitely. I was talking to a few people. I've been traveling around quite a lot last few weeks, and there's definitely a more fractured population these days. As you said, there's lots more single person households, or quite often people go through more than one de facto relationship, and it just breaks up the population base a little bit. I think as well, people have been generally requiring a bit more space because there are more people spending at least a couple of days a week working from home, and they need a home office. So that has also increased the actual demand for housing, even for the same number of people. But then you get the really big increase in population. I think in real time, we're at about 26.8 million or so now. So obviously it's the most we've ever had in the country at one time, and increasing at record pace. So starting to feed through into the media as a bit of a political issue, because the rental market in particular now is extremely tight, and the lowest vacancy rates we've seen across the capital cities on record now.
Well, you were saying how many people have come to Australia in the last year. I read recently that there's 850,000 people currently in Australia, either on a graduate visa or a student visa. Pete, that basically means that 1 in 30 people in Australia right now is on one of those visas. That's an extraordinary number.
Yes, I mean, the immigration program is always really interesting. So it was particularly during the COVID period, there was a temporary visa holders that we lost. There was a huge drop, about 750,000 people on various visas that either expired or people just wanted to get home before the borders closed. Well, that's come bouncing right back. We've now got 2.5 million people in total across all of the temporary visa classes. And as you said, international students has been a big driver. So, and that quite often you'll find that the graduates may then later go on to become citizens or residents of Australia. So a skilled pathway for a lot of graduates to come in. It's generally good. Those are younger people, they're skilled people, people who will pay tax for a long time, so they'll reduce the dependency ratio. And the population pyramid in Australia is generally pretty strong compared to most other developed countries where people, in other parts of the world, are worried about the population falling. Australia doesn't really have those issues. Like places like Canada, New Zealand, we're growing very, very quickly.
Well, interestingly, I guess this large population growth has also been bolstering our economic activity. If we didn't have so many people requiring things coming in, I guess they don't bring fridges and televisions and carpets and lounge suites with them. Our economic slowdown would have been much worse, Pete.
Yeah, I think it's if you're actually looking per capita terms, the economy is pretty much stalled. With the interest rate increases have really crimped spending as they were intended to do. We had a high rate of inflation, but actually in real time, over the past few months, inflation is falling away now. I think if you look at the Aussie economy in the last quarterly figures for June, the economy sort of grew by 0.4%. But actually, if you take into account the speed of the population growth, it's going backwards in per capita terms. But that's what the interest rate increases were intended to do, to slow down that boom in consumer spending. It's kind of papered over a few of the cracks, I guess. And it is something that a very high rate of population growth can do, is to make the sort of headline growth in the economy look a little bit better than the reality for most people.
Now, Peter, wasn't that long ago that not just the property pessimists, but a number of the mainstream economists forecast that thousands of homeowners would fall into financial distress. Some would be forced to sell their home thanks to, what they called the fixed rate cliff. In other words, people who borrowed money at 1% and 2% a couple of years ago were coming out of their fixed rates to variable rates that are now in the 5%, 6%, and 7%. But in spite of all those predictions, the rise in distressed sales, that just hasn't happened. In fact, quite the contrary. Recently, new figures from Domain showed that distressed listings around Australia, around the capital cities in particular, have actually fallen.
Yes, I think when you look at people selling genuinely in distress, the biggest indicator is actually unemployment. If people haven't got money coming in, then that's going to force people to sell. Unemployment at the moment, it's off the lows, but it's about 3.7%, the lowest in half a century, essentially. So you'd have to go back a long way to see a time when Australia's unemployment rate was consistently under 4%. So look, most people have got an income. Some people are working 2 jobs. And yes, the interest rate increases have certainly had quite a significant impact on a lot of households around the country. But I guess if you're looking at people who are genuinely forced sellers, distressed sellers, there's a couple of situations that could bring that about. One is unemployment, if people are out of work for a long period of time. The other thing is sometimes for property investors, if they just can't find a tenant, they've got a substandard property and there's no rental income coming in. Sometimes that can lead to mortgage distress or a forced sale. But of course, rental vacancy rates now are the lowest on record. So that's not really an issue either. So yeah, what we're seeing is a slowdown in consumer spending, but not really many forced sellers in the property market. Hence why listing levels are still way down on the 5-year average and stock levels are still pretty tight overall.
Well, according to Domain, only 3.3% of all the listings on their site in Sydney were distressed sellers compared to 4.7% last year. In other words, there are fewer distressed sellers. In Melbourne, it was down as well. The sharpest declines came in Brisbane, where there was a big decrease in forced listings, forced sales as well. Now, a moment ago, you actually mentioned that people have got 2 jobs. People are going to do anything they can to sell up their homes. They're going to eat Maggi noodles rather than sell up their homes. But recently, the Australian Bureau of Statistics showed that more people are working 2 or more jobs, and particularly women and younger workers as well. So they're doing that. They're refinancing. I mean, the latest refinancing figures came in showing that the banks are accommodating people. They don't want people to get into mortgage stress.
No, in fact, there's not much incentive these days for a lender to foreclose on a property. I think, we've sort of read all the stories from other countries during the global financial crisis where there was a big surge in foreclosures. But most lenders in Australia, they really don't want to do that. They would rather give people an interest-only mortgage term or potentially even a mortgage holiday. The idea of actually taking control of a property, selling it, going through the foreclosure process, that's kind of a last resort for most lenders, and it wouldn't be the preferred route, that's for sure. One of the things that we're definitely seeing, and this sort of goes back to that lack of stock and lack of forced sellers, people are just staying put. I think it's not making it very easy to find places to go to, and it's a bit cause and effect now. Now, we speak to quite a lot of people in cities like Brisbane, and people would love to move and trade up, but they're so worried about not finding somewhere to be able to move to. They'd probably rather just stay put rather than take the risk. And of course, that has a sort of it's sort of a bit cyclical, and it can also sort of in turn lead to not so many properties on the market. So the rising interest rates has actually gummed up the market quite a bit. So not many people are forced to sell, and a lot of people just don't want to sell because they're worried about not finding stock. So this sort of the idea of paying stamp duty to move is not that appealing either. So there's a lot of things that are just sort of gumming up the market a little bit at the moment, and it's actually forcing prices higher in a lot of cases.
Well, there's a couple of things that come out of what you're suggesting. First of all, mortgage stress. What is mortgage stress? And there is that notional figure that if your mortgage takes up more than 30% of your income, then you're in mortgage stress. So yes, there are still reports in the media about how many Australians are in mortgage stress, but that doesn't mean they're distressed, and it doesn't mean that they're going to sell their homes. But following on what you said about people staying in their homes longer, a new report from Domain revealed that the median length of people staying in their homes in houses has risen from 7 years to 9 years in Australia. 10 years ago, they were only moving every 7 years. Now it's 9 years. And in units, in apartments, it's moved from 6 years to 8 years over the last decade as well. Now, different cities are slightly different, but as you say, it suggests people are staying longer, even though it doesn't necessarily suit their needs. Just the stamp duty, to worry about not making enough money on the sale, the uncertainty of actually, can I even find something is what we're finding. Buyers are a bit uncertain. Should they buy first? Should they sell first in these difficult markets?
Well, definitely, yeah. And I'm pretty sure that stamp duty would be playing a significant role in that, especially the further up the price brackets you go. Some of these stamp duty levies, they weren't really designed with higher house prices in mind. And if you've got to pay 5 or 6% in transaction costs to trade up, it's not really that appealing as you start getting into the more expensive markets. So I think people would rather stay put, even with an expensive cost of renovation, or even in a property that's not quite right for your family or children. I think the disincentive of high stamp duty is definitely playing a role now, and it's keeping people in the same property for longer.
Well, people's lives change. Their kids grow up. They need more space. The kids leave home. They may need less space. So there's a lot of empty nesters who aren't right-sizing. They're living in oversized homes, not releasing the homes or the space for younger families wanting to move in. It's just too difficult. Except in Victoria, now you can, well, we don't know exactly, but the new rules from our Premier Dan Andrews suggested you can build a granny flat, and you'll be able to build a granny flat in your backyard without even requiring a permit. I don't know if that's going to help people expand their growing families. I don't think I want my kids in a granny flat.
I think it's an interesting proposal. I mean, it hasn't been fleshed out yet, but it sounds as though you would most likely be able to build a dwelling up to the size of 60 square meters without a full planning approval required. You'd probably still need to have the building actually approved itself. So it's a complying dwelling. But I mean, that could see more families creating a bit of extra space in the backyards, and not a dissimilar policy to what happens in New South Wales, I guess. And so it's papering over the cracks, really, of a housing shortage. It's not really addressing the problem at the source, which is you've got very high population growth, and the annual dwelling approvals at 170,000. That's the lowest in over a decade. So we're just not building enough. And yes, a few extra granny flats will potentially help and maybe ease the rental crisis a little bit, but it's not addressing the root cause of the problem.
Well, before he retired, ex-Victorian Premier Dan Andrews introduced a number of changes in his housing policy and a lot of talk without a lot of detail. But one of the interesting things he brought in, or he's going to come in, is it's been called an Airbnb tax, but it's not really just for Airbnb. It's for any short-term rentals, including stays where investors who rent out short stay accommodation are going to be charged a 7.5% levy. And it seems like other states may follow the lead as well, Pete.
Yes, I guess the general idea here, there's a lot more properties than there used to be on short stay leases or Airbnb and other similar portals. And the idea, I guess, is to try and force some of that stock back into the long-term rental pool. I guess on the one hand, it makes sense. I think that a lot of demand at the moment, anyway, for short-stay leases will just drive the prices higher. I think if people are going to be taxed 7.5%, they'll probably increase the rents by 10%, and maybe not that much will change. But yeah, you could see, I mean, it's politically a popular move, I guess, to try and attack the landlord. That will probably see other states and territories taking a look at similar policies. Yeah, look, it's maybe not that much of a surprise, but I guess it's just one of a range of moves over recent years to make life tough for landlords. But I guess it's not really helping in terms of the rental crisis, and particularly New South Wales, Victoria, Southeast Queensland, there's some critical shortages of rental housing, and I'm not sure more tax is the answer.
Well, I guess the thought was they're going to move these properties off the short-term accommodation market and put them back into the long-term rental pool. I agree with you. I don't think that's actually going to work. Sure, there's 36,000 short-stay accommodation places in Victoria, according to the government, and they thought that some of these would now end up, because of the tax, in the long-term rental pool. But many of them are not in the locations where long-term tenants want to live there, in regional Australia and holiday locations. So I can't see that working. But interestingly, the Greens have gotten into the game as well. In Queensland, they've proposed a huge surcharge on Airbnb or other short-stay accommodation. And the Victorian Greens have asked the government to consider imposing a 90-day per year cap on short-stay accommodation.
It's always worrying when the Green Party starts discussing economics. With full disclosure, my dad was actually a Green Party candidate many years ago. Full credit to them on the environmental policies, but yeah, it does get sometimes a bit worrying when they start talking about caps on prices and who knows what else. We actually came to Melbourne for grand final weekend, spent a whole week down in Melbourne and used a short stay accommodation. Absolutely fantastic the way it all works these days. So I don't know that, yes, increasing taxes too much. I mean, it's probably going to increase inflation, but whether it actually has the desired effect. I think if people want more properties in the rental market, you really just, lending policies are too tight. APRA has got a 300 basis points assessment buffer for landlords. So people are being stress tested at a very high mortgage rate. So that's not going to help get new dwellings built or brought to market. I just think increasing taxes in the end is just going to add to inflation. And it's not really going to help bring more rental accommodation into the market, which is what we need.
Well, let's look at a good news story that came over the last little while. And according to the Bureau of Statistics, household wealth in Australia increased for the fourth straight quarter. The Australian households' wealth went up 2.6% in the June quarter. And of course, Pete, that's because a large part of Australia's wealth is dependent upon their homes, residential accommodation, and also super funds.
Absolutely, yeah. I was actually talking about this at an event I presented at with Chris Bates a couple of weeks ago. So if you went back to all the doom and gloom of 2009 when everyone said the world was ending and household wealth in Australia was around about 5 trillion. Well, now it's 15 trillion. So a tripling, I guess, over the past 15 years. As you said, that's partly due to the value of people's homes. It's also, we've got a very successful superannuation policy or set up in Australia. And just the general model. We've got high immigration, we've got huge amounts of mineral wealth, got a great open economic model, free floating currency. There's a lot of things that are just driving wealth higher over time. I think if you look, we've now got about 11 million households in Australia. So 15 trillion, that equates to about, 1.37 million average household wealth. Of course, it's not equally split across the 11 million households, but that's higher than it was a year ago. So a bit of a downturn for a while, but it's come firing back. But yeah, the big picture, Australia is just a wealth creating machine over the long run. There's so many things in our favour. It's a desirable place. We've got international students coming. We've got huge amounts of mineral wealth, which will be needed as the Asian economy grows. There's just a lot of factors that pull together.
Well, I think you were just hinting a moment ago at some of the reasons why that's going to continue on as well, because people are going to wonder, well, can it actually continue? But Australia makes its money in general by things it pulls out of the ground and sells, that's minerals, by things it grows and sells, and also by education, which really is a great export industry. And we have got around us a whole range of neighbours, and forget China, there's all the other countries in Asia that are getting a larger middle class. There's also tourism as well, but in general, we're well situated to grow significantly. And if we believe our population is going to keep growing, and it will, Australia's got a business plan to get to 40 million people by the middle of this century. And if we are going to remain wealthy, that's the two big factors that over the long term are going to keep underpinning our property values, Pete.
Absolutely, yeah. There's the population growth and the wealth of the nation, as you often say in your wealth retreat presentations. I think, look, there's different ways to create wealth as an individual. Some people like to be startup entrepreneurs and create businesses. Other people like to be stock pickers and be great investors in the stock market. It's important, I think, as a property investor, you'll find that as the wealth of the country increases, yes, it's generally that wealth gets capitalized into particularly the capital city land values. And that's another of the ways in which household wealth has increased to 15 trillion. So there's different ways to capture it. Superannuation is another big one, as you said. But yes, land values, stock markets, super funds, and business. Yeah, there's a lot of wealth that's been accumulated over the past 15 years. And in fact, over the past few decades.
You also mentioned it's not equally distributed, and that's a challenge because in today's society in Australia, we'd like everyone to be able to afford a home, to have a good lifestyle, but those who do own assets, and in particular real estate, are the ones who've benefited from Australia's wealth growth, haven't they?
That is true. I think our wealth inequality is not actually as pronounced as it might be in, say, if you went to the USA, for example. Inequality is there's a hugely disparate spread of the wealth in many countries, especially the US, where you've got the top 1% control a huge portion of the wealth. Credit Suisse does an annual report on household wealth, and Australia's median wealth per adult around 400,000. So we score, the highest in the world. And I guess there's a number of reasons why that would be. I think the superannuation system is a big part of it because it's almost a forced saving accumulation vehicle for a lot of working adults. So that's a big part of it. Home ownership rates are pretty high overall. They're not as high as they once were, but still, I guess, around 65%, I suppose, home ownership rate. So a lot of people do participate that way. Yeah, we do obviously have inequality issues in Australia, but not quite as pronounced as they might be in other countries.
Yeah, except the media had a fun time only a couple of weeks ago saying that the top 20% of Australians are 90 times wealthier than the bottom 20%. In other words, the top 20% have got a median wealth of $3.2 million, while the bottom 20% have got a wealth of $36,000. Having said that, there's lots of countries in the world where they'd love to be as wealthy as our poorest people in Australia.
I think that's just Pareto's law at work, though, isn't it? I think if you looked at the AFL, you looked at Brisbane, Collingwood, and the top 20% of teams would have scored 80% of the goals. It's just the way numbers seem to work. But yes, it always sounds very dramatic when you're taking the top portion or the top slice. That's kind of the 80-20 rule, as they call it more colloquially. And yes, you generally find that, a lot of the wealth flows up to the top. Now, there's different ways in which that might be addressed. I think part of the challenge for policymakers is that the super wealthy find ways of avoiding tax, and we don't have big inheritance taxes in Australia. But there's different ways it could flow back down. The giving pledge is one of the ways. Billionaires making sort of donations and sort of becoming sort of charitable givers. There is an issue, but that's a global issue, and I'm not sure how easily it is addressed. Thomas Piketty wrote a famous book about it. Could they introduce a wealth tax for the billionaires of the world? But in terms of how that would be practically acquired or practically applied, it's very, very difficult.
Well, I remember a couple of years ago, there were some protests about the 1% who owned everything. Remember those protests in America? But it's interesting that those people who were protesting were really the top 1% of the world, because just by living in the United States or in the Western countries, you're doing better than a lot of people, which I saw when Pam and I travelled around the western coast of Africa a couple of years ago, and the abject poverty that was there. So I guess we've got to remember that we are living in good times in Australia. There are still challenges ahead. There's challenges for our economy. But it looks like overall we got through the worst of the tough times. We haven't fallen off a mortgage cliff. Interest rates have peaked. There may be one more interest rate rise along the way. Inflation slowly coming under control. The best is yet to come, Pete.
Yes, I mean, it's something when we go to the wealth retreats every year, it does make you realise when you actually look at the global figures, most of the people, those kind of events will be homeowners, they've got superannuation. So effectively in the top few percent of the top 1%, and very, very lucky country, Australia, as it's often said, but it really is true.
Pete, I always love our chats together. If people want to keep in contact and keep up to date with your thoughts, how do they get in contact with you?
Pete Wargent Blogspot is my daily blog, or you can catch me at Pete Wargent on Twitter. Usually busy there most days, firing off opinions left, right,
centre. You have been
so
very busy on X, as it's now called, not Twitter. And I'll leave a link for both of those. And I enjoy reading your daily blog as well. So look forward to that. And I also listen to your podcast with Owen Rask. I particularly enjoy your ones on a Sunday morning, you and Chris Bate with your 2 cents. Happy to give a plug for that because I enjoy listening to it. So others will as well. Thanks for your time, Pete.
Pleasure. Thanks, Michael.
I hope you got some benefit from this month's Big Picture podcast with Pete Wargent. Now, if you enjoyed it, if you learned something, but you don't currently subscribe or follow this show, before we get on to the next segment, my mindset session, and a little message I want to give you in just a moment, why not pause and follow this show or subscribe, depending upon which podcast app you've got? Because twice a week, I come to you with some of Australia's leading experts to give you insights into our economy and our property markets. That way you won't miss a show. Now, before I get on to my mindset message, I hope you saw from my discussion with Pete Wargent that there's lots of positives in our market at the moment. On the other hand, I think a lot of investors or potential investors or home buyers have been looking at our property markets the wrong way. I'm still hearing investors worry about the fact that there are more properties coming onto the market for sale, and they're worried this will halt growth, or they're worried about talk of unemployment rising over the next months, which may cause mortgage stress. Some are still talking about concerns about the mortgage rate cliff, but as you heard Pete and me mention, that's really not a cliff to worry about at all. And yes, inflation's stubbornly high, meaning interest rates will remain high for longer. So these potential investors and home buyers are sitting on the sidelines waiting. They're waiting for all the signs to improve before they move into the property market. On the other hand, strategic investors are taking a long-term view. They're not worried about where interest rates are going to be or the economy is going to be in 6 weeks or 6 months' time. They're making their plans based on where our housing markets are going to be in 5 years' time or 10 years' time. You see, they see the increase in properties for sale at the moment more likely reflects the fact that sellers, who are in general also buyers, buyers are sellers and sellers are buyers because they've got to move somewhere, they see this increase in properties for sale as just another sign of growing confidence that interest rates have peaked and that our market's moving forward. These strategic investors also realise that property markets reset earlier this year and they've now been rising for 8 months in a row, and that currently the combination of FOMO, fear of missing out, a severe shortage of properties for sale and to rent, and the strong population growth that Pete and I spoke about are going to keep property prices rising for quite some time. And at the same time, rents are going to keep rising. And despite all the government talk, all those new ideas and plans that we've spoken about in previous podcasts, we're going to have a shortage of properties for sale for quite some time to come. And when you combine all this together with the significant increased cost of any new construction to make it financially viable, there's no end in sight for rising property values. No, they're not going to rise as significantly as they have, as quickly as they have in the first couple of months of this cycle, but that was unsustainable. And I guess more investors are seeing this, home buyers as well. And maybe that's why we've had more investors and home buyers engage our services at Metropole in the last couple of months than we have for a long time. I guess they realise that at Metropole we're more than just another buyer's agent. We safely help our clients create intergenerational wealth through property. And while we're big enough to tip the scales in your favour, we're still small enough to care. So why not go to metropole.com.au and organise a complimentary chat with my team and explore your options. Now, I'm not oblivious to the challenges our economy and our housing market are going to be facing. We know there are landmines, and like you, we're reading how many investors are selling up within 3 years of buying their property when they realise they've made the wrong decisions. That's why even before we talk about the next property with you, we're going to help you formulate a strategic plan that's going to safely maximise your upside and minimise your risks. So go to metropole.com.au and have a chat with my team, and let's explore your options.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to talk to you a bit about stress and explain that it can be both a good thing or a bad thing. Now, imagine you're part of a group of cavemen, way back thousands of years ago, walking through the tall grass in the savannah on the hunt for your next meal. Suddenly, a member of your group catches a glimpse of a lion out of the corner of their eye, and the member motions to the other members of the group, and in a split second, everyone in the group is on high alert, intensely focused on the movement of the lion. And I guess as if an entire group was one person, you'd cautiously move away from the direction of the lion. You'd never take your eye off that lion until everyone was out of harm's way. So stress is an evolutionary radar system whose purpose is to enable humans to single-mindedly focus on a single threat until the threat no longer poses any danger. It gives us laser focus, but for a short period of time. Everything in your environment, other than the threat, fades away. Now, in the modern world, stress makes it possible to study for exams, to fight off a mugger, to even defeat an enemy. Stress allows us to solve pressing problems. But it comes at a cost. You see, stress is a negative emotion that causes our focus to become narrowed. It limits our ability to see anything but the problem. We get tunnel vision. But we don't work in the savannah anymore, do we? We work in offices, cubicles. I guess more and more of us are working in our home offices. You may be working in factories, in emergency rooms, out to the field, where stress is all around us. And when that stress sticks around, it perpetually limits our perception and our focus to one thing, and one thing only. It inhibits our ability to be creative. That means we need to turn off stress in order to be able to creatively solve our problems. Creativity, insights, and eureka moments require a positive mindset. Creativity requires a relaxed mind, one open to new ideas and new information. So, here are some ideas, maybe some ways that you can turn off stress and relax your mind so you can maximize your full potential if you're having challenges. Now, one way is to laugh. Now, I know it sounds a bit silly. A while ago now, I did a podcast with a laugh expert, and I remember at the end of the COVID period, he actually came into our office in Melbourne and made us all laugh, taught us to laugh, because when you're under stress, you can tune it out by finding something funny to distract you. What happens is laughter shuts down stress. Humour shuts down stress and shifts your mind from negative to positive. So just find something to laugh about, or just even have a laugh. Now, another way of shutting down stress if you're having a difficult time is to meditate. Now, to be honest, I'm not too good at that. I find it hard because my mind's busy. I think somebody's called it busy brain, but having said that, I know a lot of people can. They sit down, they relax, they shut off their mind, only for a couple of minutes, calm their mind, shut down their stress. Of course, exercise is a great way to relieve stress as well. Now, you may do something as heavy as go to the gym and lift weights, or go for a run, or do yoga, or be on an exercise bike. just go for a walk. Exercise is a great way of decreasing your stress. Reading can lower your stress levels too, but you've got to read something uplifting that's going to shift your mindset from negative to positive and shut that stress down. If you've got time, watch an inspiring movie. Watching a movie that inspires you, excites you, makes you laugh, takes you to another place, gets you away. That'll turn off your stress. Or listen to relaxing music. It relaxes your mind and turning off your stress. I'm just going through a couple of ways that if you're currently stressed, that may help you turn down that stress. Or get involved in something creative, a creative activity. Paint, write, make something, engage in creative activities that puts stress aside. Now, alcohol, moderate consumption, say don't get drunk, 1 or 2 drinks, may be what you need to put stress in its place, but don't overdo it. Or go out, socialise, hang out with some friends, volunteer at a charity, go to a party, socialise with people because it relaxes your mind, it changes your mindset. And maybe just something as simple as changing your environment. If you're stressed, step away from your desk, get away from the office for a little while, step outside. Getting to a different environment is a good way of putting you in a better mood as it washes away the stress. So, stress is an integral part of life. It's always going to come, but you've got to learn to make it go away so you can think clearly, so you can think productively. Well, thanks for spending the last little while with me, and I hope you got some benefit from this show. If you did, and you know somebody else who'd also benefit, please tell them about the Michael Yardney Podcast. There's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons down the bottom. Press it and share it, or just tell them about the Michael Yardney Podcast. I hope you're going to be doing them a favour, and you'll definitely be doing me a favour and helping me in my quest to make as many people as possible financially literate. Now, there's ways of catching up with me between these shows. Just look for Michael Yardney on social media, or why not join my private Facebook group? Go to Facebook and look for the Property Update Facebook group. And I have a way of saying thank you to you for subscribing to this podcast. Go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where you can get a bunch of ebooks and reports. My way of saying thank you. And when you've got time, why not listen to some of the old podcasts? There's individual lessons in each of those that I think would be helpful for you. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?